right. Hello, everyone. Those of you who are joining us virtually, and we have some folks in person, we are super excited to welcome you to today's QuickBooks Tax Reporting webinar, hybrid format. So what you see here on my screen is the San Luis Obispo Cal Poly Hot House, and then virtual attendees. If you do have any questions or comments, just go ahead and use the raise your hand feature or throw it in the chat, and I will make sure that Damon sees it so you are included in the discussion as well. All right, quick little introduction about who we are. The Cal Poly CIE SBDC is a part of a national program with over 1,000 locations. The SBDC exists to help stimulate economic growth through the creating of jobs and business growth for small businesses and entrepreneurs. And we do that by providing no-cost consultation and training and resources to small businesses and entrepreneurs at no cost. Thank you to our sponsors for that. The SBA helps to fund our programming as well as the California Go Biz. But we do also have some private sponsors as well. And one of our private sponsors is Kelly Caviglia of Bridge Bank, and she is going to give a brief message about their program. So go ahead, Kelly, take it away.
Thank you. Hi, everyone. Happy to be here today. So I'll keep it short and sweet so we can get to the important information that you're here for. So Bridge Bank is a startup and technology focused bank headquartered in Silicon Valley. We have offices everywhere. Most people are remote now, so we serve mostly remote startups. For us, it's important that we work with startups from inception. Hey, I just got incorporated and I have an idea, all the way through IPO. So BarkBox is a great example of a client that we've helped go IPO. I myself head up our startup banking practice, which really focuses on early stage and making sure that you guys have resources and tools available to you to help you scale your business. Some of that includes up to 3 years, no banking fees, so that you're not having to worry about, getting nickel and dime when you should be saving your money for other things. And, also making sure that you have connections. We recognize that we are very well connected in the tech community, so might as well share that love with you. So that, discounts on HR tools and introductions to law firms. Obviously you get a lot of that through Cal Poly's organization, but, we're an additional resource to get you connected as well. And then beyond that, down the line, we have an extremely robust venture debt practice. And so, for us, it's really important that we can pull in, our team members as needed, and it's all based on a relationship. So you work with one team for the extent of your relationship with us, and we really want to make sure that it's something that, you know my name, I know yours, and we can help you guys be successful. So I'll leave it at that. If you guys have any questions, I believe that my information will be included here. I'm happy to chat and see where we can be of assistance. Thank you.
Thank you so much, Kelly. All right, and without further ado, our speaker today, our very own Damon Watkins, our Director of Finance here at the Cal Poly CIE SBDC. He is our QuickBooks extraordinaire, and he will be guiding you through an exciting workshop on tax reporting and 1099s today.
Yay. Good afternoon, all. Thank you very much for attending our first tax reporting session of the year. I just start by saying and talking a little bit about the SBDC and what it does here for our local community. The SBDC here, which is located in the CIE Hot House, offers a number of different consulting avenues for small businesses starting out. This class today is just one of those that we offer in that regard. We have a number of different consultants that work in multiple different fields that are here exclusively to work with small businesses in the local community and help them grow and become successful. I highlight this because if you are not currently an SBDC member at this point in time, I do recommend at the end of this event going ahead and getting signed up. The resources that are available to you, all free of charge when it comes to things like consulting, marketing plans. We have consultants in specific fields that are geared towards helping you become successful at your business. So with that said, I just want to talk a little bit about what we do here. This class in particular is my first tax reporting class of the year. I actually do offer 2 other QuickBooks related classes. One is a beginner's class, which is everything from setting QuickBooks up to getting a chart of accounts. The other is my intermediate class where I look at things like P&L, chart of accounts, cash flow, forecasting, and things like that. Today's class is specific to tax reporting when it comes to QuickBooks and your business in general. And what I mean by that is I specifically will focus on the questions that you need to be asking regarding your business to be able to close out your financial year. With that said, I do want to let you guys know I am not a tax consultant. I've been doing this for 25 plus years, and I've worked from everything from $1 million business up to a $200 million business that has utilized QuickBooks in some form or manner to do the tax reporting. The reason I bring this to your attention is that from a scalability standpoint, as long as everything is set up and you are tracking and recording everything within QuickBooks, it's able to be scalable from a growth perspective when it comes to your business. Do keep that in mind. A lot of the time I get people come to me, ask me, should I be doing my taxes in QuickBooks? Well, if you have a good understanding of your business and what's taking place and you have a plan in place, absolutely. If you don't have the knowledge base and you are unsure, seek professionals' help. You can really dig a hole for yourself with a lack of knowledge and understanding and actually hurt yourself and your business. So again, really clarifying on where you stand in regards to your financial well-being and the tax reporting of your business as it relates to QuickBooks. The one point I would like to add as I take a sip of my tea is that unfortunately the IRS does not view ignorance as an excuse. So if you ever get yourself in a position where you are going to the IRS, or as the people we deal with here at the BOE in California, the fact that you didn't know, you were unaware, is in no way an excuse to them, and you will have penalties leveled against your company that you will be having to deal with for years to come. With that said, I'll give you the other side of the story. I often encounter businesses here in town that have been operating for a number of years and have never filed a tax return. Why, just last year, I had a lady walk in who had been selling salsa in town for 7 years, and she had never filed a tax return in 7 years. Needless to say, we were able to work with both the state and the IRS, come up with a payment plan for her, and facilitate keeping her business afloat during this period of time. The point I'm trying to make here is it is so very important for you to file your taxes and get the documents in. One of the biggest mistakes before we start that I'd like to emphasize here is that the IRS and the BOE do not require you to create a tax liability for you to report. The act of reporting is the requirement, not the reporting of numbers. The reason I bring this up is there's an association that if I have nothing to file, I do not have to file. That is not the case. The act of filing itself is a requirement. That means even if you are filing a zero return, you need to file a zero return, as you will be penalized if you do not. Okay, this is something that's important to keep in mind. Most people don't think about that when it comes to taxes. So before I get started, the one thing I'm going to say is the good news is we have a really small group here, which means as I go through these scenarios and talk about sales tax relating to QuickBooks and payroll taxes, don't hesitate to interject, because what tends to happen with a larger group is I'm very general in the way that I approach these. With a smaller group, if you have a specific issue or item, we can delve a little bit more into it, because I'm not playing to the group that's here. With that said, if at the end of this meeting, I have not answered all your questions, or you have more, let's set up a meeting. I'm in here 7:45 every day until 4:30. This is my job. I thoroughly enjoy it. If I can't answer your questions here, let's set up a meeting where I can sit down with you and we can go into it in a little bit more depth. So with that said, let's get started. Before I put a slide deck up on the screen, I'm going to take you back in the Wayback Machine to all the things that you should have done by now, and where at this point I will be basing our taxes being filed with the state. So let's talk about that. You've registered your business, you have a tax ID number, and you are registered with the Secretary of State. You have registered with the IRS under your tax ID number, and you have registered with Board of Equalization in California. Those are the three key requirements that you need to have taken place for you to then facilitate completing that filing. Now, when we talk about filings, we talk about two worlds that we're going to be operating in today before I bring it up on the screen. One is going to be payroll taxes, which I will talk a little bit more later on. The one that I'm going to dive into right away is going to be sales tax, because it is the one that impacts most people from a QuickBooks perspective. So, is my screen shared up there?
Nope.
Okay.
See, this is why you need two laptops.
This is true. So do I have to share my screen from here?
Yes.
Oh, great. Okay. So let's talk a little bit about small business taxes. So in the world that we operate in from a small business taxes perspective, as it relates to sales tax, we have two auspices that we live in. We have a product / merchandise side of things, which is a physical product that we're selling to a customer, and or labor / services. So those are the two worlds that we operate in from a collection standpoint within QuickBooks, right? Materials are taxed at a tax rate where the labor portion of it is not. Now, the reason I bring this up in particular, the reason I bring this up in particular is it all goes back to how you have set up your QuickBooks. And the reason that I say in particular how you set up your QuickBooks is if you have individuals, and while we're talking about people here, so we're talking about the labor section, you have two options, right? You run your individuals through payroll, they're a traditional payroll individual, all the payroll taxes are handled within QuickBooks by the payroll side, or we utilize them as subcontractors, where we set them up within the system as vendors. Now, these are the individuals at the end of the year that are going to be looking for things like 1099s for us. So again, taking the time to ensure that these individuals are set up correctly in QuickBooks and that we have the necessary tax documentation to facilitate creating those 1099s is a big part of what we're going to be talking about today. So keep that in mind that as we go through this, if we're talking about labor from a customer sales side of it, these tend to be subcontractors, 1099 individuals. Labor associated with the employee is going to be through the payroll side. I bring this up because a lot of the time there's confusion that's created in this area. And having a clear understanding of who's being paid by a subcontractor and who's being paid through your payroll is going to have a significant impact on your payroll tax liability, right? And so making sure that that line is very clear. I can't tell you the amount of times I come in and this, well, they're a subcontractor. Well, then why are they an employee? Well, so you need to be very, very clear about this. I don't want to spend too much time on this only because once we go down the rabbit hole of employees and payroll, it can be very specific to the nature of the business that you're in, number one, and how you go about utilizing that. Do you operate in multiple states? Do you operate in California only? Do you operate internationally? Things like this that we really want to hone and focus in on. So, with that said, we're going to take a quick step back now and take a look at understanding business taxes from the FDIC standpoint. So we're talking from a federal level. And the reason I'm going to start here is that the federal oversight supersedes the state oversight, right? So if you have a clear understanding of what is mandated to you by the federal entities, you will always meet the state entities' requirements. Most people have it the exact inverse, just so you know. And you know why? Because we live in the state, and all the documentation we get is from the state of California via WE. With that said, if your federal requirements are being met, they will always cover the state requirements as well. Something to keep in mind. Just going to reiterate this right now. You do not need to take any notes. Everything I will be presenting today will be sent out at the end in a PDF to everybody. That way, if you have any questions, you can always get back to me. I know it's a lot to take in today. So again, everything I will send you later. And if you have questions, you can call, email me in regards to this. With that said, some of the key aspects of what I want to get through today is distinguishing the different types, the various types of taxes. So we've talked about the labor side of taxes, and we've talked about the merchandise/product side of it. How do we navigate the Internal Revenue website, right, to understand what's taking place? I'm assuming at this point, most people have been to the website and got themselves set up. They got to the page where it says make a payment, and everyone gets kind of stuck there. And I normally get, well, what do I do next? I'm going to walk you right up until that point, show you what they're looking for, show you where in QuickBooks to get it. That's the good news about QuickBooks, is if it's set up right and you're doing it right, it's in black and white. It will tell you what to report, when to report it, and how much to do it. That's the great news. The caveat is what I just said. It has to be set up right. And that's where the knowledge base comes in. If I was going to give a bit of advice to anybody out there when it comes to QuickBooks, spend the time and the money to get somebody to set it up right for you. It will pay dividends for you later on in spades. If you don't, what happens is you end up making more work for yourself, then you end up having to go back to that professional at a later date, spend more money just getting it fixed, and then having to go back and redo your taxes anyway because it wasn't done right in the first place. And those can incur some significant penalties as well. Lastly, but not leastly, identify some of the specific IRS tax sections, such as tax forms, tax guidance, and publications. So one of the other things that I'm going to do for you at the end of this is QuickBooks has this amazing database of resources that's out there. So just so you guys know, I've been doing this for 25 years, and I still get questions that I don't know how to answer. And the first place I go is the database. And I have direct contacts at Intuit that are partners with the CE. I could go to them and ask this question. I go to the database online, I type my question in, and there's normally about 600 people who have asked the same question over the last 25 years. Great resource. I can't overstate what a great resource. And if the answer is not there, what I normally tell people is, it's not a question you want to be answering. Go get help. And that's the key part about QuickBooks that I would say is if you run into a situation where you can't answer the question, don't. Go to someone that can. Because that's normally the point where you need that extra help. You need that extra set of eyes. And we're all human. I'm going to be honest, I still run into payroll questions. I know QuickBooks well, I run payroll, but there's still certain situations where I have to go back and ask that question. So I always like to emphasize that huge database of resources there that's available for QuickBooks. I'm not going to go too big into the FDIC's requirements and resource effort. Everything that relates to the small business side is accessible to you guys as members of the SBDC. Again, at the end of this, I would highly recommend signing up as a member to get access to all the resources that they do have, including the Hot House. One of the things I'm going to touch on really briefly for you guys is the forms and the resources at the IRS government's website. I will include this link when I send out the supporting documentations after the event for everyone. With that said, start with the QuickBooks side before you go to the IRS side. The IRS side, the level of detail and complexities can be a little bit too much for people at times. General information that we talked about already. We all know what an EIN number is. We're all comfortable with what we utilize in regards to our business as an entity. I put this up here because a lot of the time I'm still dealing with businesses that are sole props and under the Social Security number. It's really important that if you're going to establish a business and know you're going to incorporate at a later date, get the EIN established, get your business established with the Secretary of State so that you can operate as a business as such. Business taxes. So let's touch on this really quickly. I touched on it at the beginning of this discussion point. Just understand the different types of taxes that we're talking about. So number one, income tax. All business except for partnerships must file an annual income tax return. Partnerships file an information return. It's a similar document, it's just titling is slightly different. This one's really important, and it's what we're going to actually touch on today when we talk about the sales tax and the income tax accruals. Now, sales tax and income tax are treated differently. The income taxes are once a year, and this is where you are going to want to have a good CPA. No matter what I show you and tell you how to do today, it's going to take care of the sales tax side of things. But it's like knowing a good plumber and knowing a good mechanic. Having a good CPA to review your business financials is absolutely key. Now, do you need to be calling them every week? No, you do not. If you're set up correctly and you're doing it right, this is the kind of meeting you have once every 6 months, maybe once a year, to ensure that that income tax is being filed. Again, ignorance is not an excuse. You don't file, you will get the penalties associated with it, irrespective of, and it's not anything to joke around with. Self-employment tax. Most everyone here is incorporated, so I'll touch on it really quickly. Self-employment is a Social Security and a Medicare tax primarily for individuals who work for themselves. So just what you see if you work for an entity on your pay stub, that's specifically what it relates to. Employment taxes, we touched on this briefly in QuickBooks. It runs through the payroll side of things. It's when your employees have certain employee tax responsibilities that they must pay for. The nice thing about QuickBooks in the payroll module is it takes care of all of this for you once it is set up. Now, it is an additional expense, and I don't recommend that you use it if you have less than 5 employees, because to be quite honest with you, internally, you can only manage payroll for under 5 employees. Anything more than that, if you can justify from an expense standpoint, utilizing QuickBooks payroll system, and it's super easy, which is that you have your employees fill out their W-4s, they put it into the system does all the calculations for you, it accrues the tax withholding and does the filing for you automatically, which is great. So what happens is on a Friday, just a lump sum comes out to facilitate payroll, your employees get paid on Monday, and all the taxes are paid for you. You do not need to worry about anything. It's a huge plus for small businesses that are just cresting, going over that 5 employees, but they don't want to go out and pay a large paychecks company to facilitate doing. This is a way for under $100 for you to manage your payroll, have it taken care of, and know that the filings are being done. I highly recommend it. Again, it tends to be around that 5 mark where it makes the most sense for businesses to be doing this. Excise tax. So I'm going to touch on excise tax really briefly. There's not too many states where we deal specifically with excise tax unless you are shipping to places like Hawaii, where you do have to file and report that specifically. 2 states that are a real pain to deal with is New York and Hawaii, just so we know. Because of the excise tax is actually considered double taxation. And the way it is, so just so you know, excise tax by definition is double taxation, which is illegal, so they renamed it excise tax. True. Only 2 states that get away with it is New York and Hawaii. So, and just so we're clear, what that means is that you're taxed on the gross, not the net. We understand what that means. So if I go and I buy this table, it's $1,000, and the tax in Hawaii is 10%. Here, that 10% would be applied against the $1,000. In Hawaii, the 10% is applied against the $1,100. Mind blown.
More than double taxation.
And so this is where people are like, wait, no, you can't do that. Yes, they can. And the Supreme Court's looked at it and said, yes, they can. So really important. I'm hoping nobody here ships out of state to Hawaii or New York. You have to deal with that. Just keep that in mind from that perspective. Payroll obligations and payroll taxes, we're going to leave it alone for today for the very simple reasons that we talked about. I would highly recommend using the module if you have. Employment taxes are handled in the same manner, facilitated through the IRS. Again, good CPA and a good system to report and track, which QuickBooks does for you automatically. Employment tax, so the deposit of the employment taxes is exactly what I spoke to you guys briefly about earlier. It's done automatically through the payroll taxes. They actually pull it out and hold it in an escrow account, just so we're clear, depending on the amount of employees and the amount of payroll liability that you've incurred, dictates the frequency by which you need to file with the state. So let's get on to the fun stuff that I actually like talking about. Let's talk about state taxes. So state taxes are actually made up of 3 core components. There's the state portion, there's the county portion, and then there's the city portion. And as such, when you do your reporting through the IRS and the DOE, you're actually mandated to break it out in that fashion. Now, the good news in that regard is that if your QuickBooks is set up with the counties and the state that you operate in, and you punched in that zip code with the customer that you're utilizing, the system will automatically track and accrue it for you within the correct counties. One of the things you're able to do when you go into the tax reporting menu within QuickBooks is break out the tax accrual by county. Now, the key part about that is that you set up those counties within QuickBooks to then accrue against, right? So any sales that we would do here, right, would accrue in SLO County. But let's say we were in LA, we're at an event in LA, and we did $1,000 worth of sales in LA. When we filed that, we would have to file the fact that we did that $1,000. We wouldn't specify the $1,000. We would actually specify the tax accrual that we'd accumulated in that county. And so by filing by county basis, the BOE is able to then break it down to the city level, because the city gets a portion of it as well. And so all of that rolls up to your annual tax return, which is what we talked about from your income tax return. And so this is how they all align. Okay? And I know it's a lot, you're like, whoa. The good news is the payroll portion of it is probably the simplest part, and the part that you need to spend the least amount of time on. With that said, the part that you probably need to focus the most on is your customer side. So when you set your customers up within QuickBooks, and in fact, let's switch over so I can show you exactly. We could switch back. Okay, and we are looking at QuickBooks. So this is QuickBooks desktop version, just in case anybody's interested. I'm very much more of a fan of the desktop version than the online version for multiple reasons, but either and or will work in this regard. Specifically, what I just want to spend some time taking a look at and showing you is the tax reporting side of QuickBooks. Let me double check something. Now, the key aspect about the reporting of taxes in QuickBooks is how that information is stored and tracked within the system. So as an example, and I'm going to use a lot of examples here, and what I'm hoping will happen is you guys will give me some feedback as to your side of the world and what you're seeing, and then I can correlate it. Because just to be clear, we're looking at a construction company here that I'm using. The reason I like the construction companies is I have labor and materials here. So it enables you guys to get a clear vision of what's actually taking place. So let's take a look here really quickly at a simple invoice that is being processed out. Okay. So good news, bad news. Good news is that on the new desktop and on the new online version, once you punch in the bill to address for the specific customer, the system automatically maps the zip code that is associated with that specific location. The reason it does that is it maps that with the county and pulls in the correct rate. Now, this is a big one. In the past, I would have to take about 3 days every quarter to go through and review every county to see if they'd adjusted their tax rates. So the BOE, and I have it saved, updates their tax rates in different counties every quarter. You are responsible for updating that tax rate even if you weren't notified. So again, ignorance is not an excuse. The good news is that these days, this is updated automatically for both sales tax and payroll tax. Big plus for everyone. In the past, you'd have to manually go in and update this information. So the key aspect of what I'm trying to highlight here is making sure that you have the correct address and the correct zip code. What then takes place is this system actually maps it to the local post office, which is where all tax rates are stored based by zip code. So if you ever need to get a clarification on exactly what your rate is, and I'll speak to why this could be important, you can always check with the post office. If you give them an address, they will give you not just the first 5 digits of your zip code, but the last 4. I'll give you an example of why that could come into play when it relates to your business. How about out by the airport? Okay, so our airport is kind of unique in that most of the businesses up there are part of the city. But there's a huge tract of land right opposite the airport that is not inclusive of the city. And the reason for this is when the city negotiated, the city has the right to 0.5% taxes on anything done. To give those businesses an advantage, they excluded that area. Why is this a big deal? Well, I used to work for a company called REC Solar, which is based out there. We used to be tied to Sunrun, right? And when you're doing about $8 million worth of sales a month, half of 1% is a whole lot. And I remember going to my boss and saying, we're paying city taxes and we don't have it. And he's like, no, we're not. And I'm like, yeah, we are. There's the 0.5%. There's what I just filed. And we're not in city limits. And we've been paying it for the last 8 years. 400 grand. So that we didn't have to pay. Understanding your business, where you are, what's taking place is so, so important. Take the time, get the knowledge to understand what's taking place. Where are you doing business? Where are you sending it from? Where is my nexus? These impact your ability to do business. So I like to use this story just to highlight the fact that know where you live, know what you're responsible for, and understand your business. This is a great example of what I'm talking about from that perspective, right? So we can see that we clearly have a fixture here, a light pine kitchen cabinet wall unit, right? And clearly this is a tangible product. So on the side here, we have it marked as a taxable item, right? The system automatically knows now that based on this zip code up here, which is in St. Thomas, I need to apply a 7.75 tax rate to this particular invoice, right? Down here, we get the total balance that is due from this. And so now the system will accrue that tax liability for me until I go do that filing that's associated with this specific invoice. At which point in time, it's going to tell me, well, you accrued $62, you need to go file. Honestly, it's that simple. As long as you keep it that simple from a simplified perspective. Now, the part that I like to emphasize on this page, and this is kind of unique to the way that I go about things, is a lot of the time when people set up these items, and we all know at this point what an item is within QuickBooks, right? They'll mark it at that point, whether it's taxable or non-taxable. I don't recommend that you do that. I want you to have the control depending on the relationship and business that you're doing, because you don't know the other state that you're going to be working with or the other location that you're going to be sending this to. So the reason I bring this up is to note that you can always see here in this column, whether it is a taxable item or a non-taxable. And I want you and your customer to be able to see that, not have it hidden in these details here. It's also reflective down here when you see that total for your customer. Why am I seeing an add-on down here that I'm not seeing reflected in this line? So each line item should be reflective of it being either a taxable or a non-taxable scenario. It is a great check for yourselves as you're going through those inputs. So labor, non-taxable, materials, fixtures, taxable. Again, within that, we can have a further discussion about subcontractors, things like that. But from a broad perspective, this is the way you want to think about how your line items proceed, right? So conversely speaking, labor would be a non-taxable line item that would be within here if we were inputting it. And so it simply fall under the non-taxable item, where we would specify what it is relating to, whether it's carpet install, whatever that activity is. We can then track the labor against the expense that it was charged. Questions?
Can you change that each time, taxable or
Yeah,
non-taxable?
as you keep adding the line items, you
Wouldn't it
can,
always be a taxable item though? Like if you.
always is a really big word.
Yeah.
And when we come to taxes, I don't like to use the word always. Most of the time, yes. But there's states again, but that's not
And
true.
you can't turn it off if it's embedded in the product.
You cannot, which is why I don't like
So it's for
it.
visibility and for accessibility.
Correct.
Okay.
Correct. Now, I'm going to throw, I keep bringing them up, but if we were in New York or Hawaii, your labor would be your labor would be taxable from this perspective. So that's again, and do I think either of you are going to do, hopefully one day, but the point I'm trying to make is that if the system is set up correctly, it can handle either or. When we when we draw a line in the sand to say this will never happen, guess what invariably is going to happen? For sure. That's the story of life when it comes to this scenario. So understanding that point from the invoicing side and having it set up correctly to capture that is the key part about this that I was trying to convey.
Okay, that makes sense. Thank you.
Does that make sense for both of you? Okay. So I am going to go back into the reporting because I do like to spend a little bit of time here. Let's do your. You know what, we'll do it the other way. So how familiar are you guys with QuickBooks reporting? Have you spent much time in QuickBooks reporting? Okay.
It just,
Profit loss and basic stuff.
Okay, so I'm a big fan.
it just logged in.
Big fan of this. And I will tell you why. The part about this that I like is that you can build your own reports to meet your needs, which means that somebody else out there to this date has already made any report that I asked for, whether it's a tax report, whether it's a P&L, whether it's some kind of customization of both in some manner, it has already been generated within the system, right? So the nice part about that is I can take something that somebody else has already formulated for me, customize it to my needs, and then save it so that it can be utilized later. It's particularly helpful when we're doing tax reporting, right? Because you can go in here and let's go down to your, let's switch it up. And let's go. There we go. Let's do transaction list by date, something simple. So this is really what I wanted to get done at my core from a reporting perspective. And this is a really simplified version of what's going to take place. Now, have we all been onto the BOE in some form or manner and walked through the process of filing? Or yeah. So you're going to, long story short, you log in, it's going to ask for the gross sales. You go in here, you look at the gross sales, plug that number in. And then it's going to take you to the state as a whole and ask you to break it out by the counties. And this is where it does get a little bit tricky, because if you're in an Excel, which is what a lot of the people that end up sitting in this room are, and I have to start doing pivot tables to figure out where they're getting from, what county they're in, the system does it for you automatically. As soon as you go into sales tax liability, the system has already prompted you to show you which counties those are taking place in. It's simply a matter of you then taking this information here and correlating it into the BOE and the IRS. Now, this speaks more specifically to the BOE, which is the state reporting. But the good news is if you set the counties and the states up in the manner that we talked about earlier, it's going to accrue those tax liabilities by those locations. And it's simply a matter of you plugging in. What was the total at St. Thomas? Boom. What was the total at St. Domingo? Boom. To give you that total balance that you plugged in at the beginning. The good news is, that's it, guys. It's literally that simple. What then happens is the system goes in and it calculates in St. Thomas this dollar amount at that 7.75 dollar amount to create this tax liability over here. And then as long as these numbers tie directly back to what you're seeing on the BOE and the IRS, you're good to go. Now, the good news is this is a matter of just repeating this cycle over and over on a quarterly, semi-annual basis to facilitate the reporting. I do recommend when it comes to the BOE that you get used to doing it on a quarterly basis. It will make your life a lot easier. Again, it doesn't mean that you're filing to pay each time, you're just filing for that quarter. It is a lot easier to file for a quarter than it is to file for a 6-month period or for an annual return, right? It also gives you the most working knowledge relating to the business, to your business. And most importantly, and here's the most important part, we're human here, which means what? We're all gonna make a mistake. It is far easier to fix a problem in the quarter that you're in, as opposed to waiting to 6 months afterwards and going, what was I doing? I have no idea. And how are we going to fix it? And let me tell you, that last one is the reason more so than anything else that I recommend you do it on a quarterly basis. You know what I mean? You will stay on top of it, but most importantly, if there's an error, if there's something that you've done incorrectly, you're going to catch it there. You're going to correct it there, not 6 months down the line. One of the things, I don't know if you've been in my prior class, that we want to get into the habit within QuickBooks is closing out prior periods, because the implications of filing and posting to prior financial periods that have already been closed out can have a significant impact on your QuickBooks. This is where you come in and your P&L is shifted and you're like, what happened? No, I didn't do anything. Come to find out one of your admins put in an invoice for a prior month that hit the ledger, drew it down, and now you're off. These are simple little things that you can do. Now, what I'm talking about, you have the ability to go in and lock the system out once you've closed a financial period. So once you've closed out a month or a quarter, you can go in and lock the system, not enabling anyone to go back and post within that period. This is something that I emphasize in my early classes quite heavily, because you can put all the work in to get that reconsolidation done, and all it takes is one person to go back in and put an old bill that showed up from 2 months ago in a prior period, throws it all out of the way. So that relates to payroll, that relates to taxes, and that relates to anything that involves closing out a prior period. It's something I also highly recommend is that you close out your books each month. Use the reconciliation feature within QuickBooks, get your bank statement. The QuickBooks prompts you, it says, what's the beginning balance on your statement? You type it in. What's the ending balance? You type it in. QuickBooks then reviews your statement against all the transactions in there, ties them out. If it finds any discrepancies, it notifies you. Way easier to do on a month-to-month basis. Way easier to catch that tax liability or that entry that was not marked correctly if you're closing it out. We offer classes in regards to exactly what I'm talking about. That's my beginner's class that I go through, the rudimentary things that you should be doing to get you to this point. So with that said, having that clear understanding of what's taking place and having QuickBooks set up correctly is what's going to lead you to getting these filed correctly. I'm going to say what I said at the beginning. It's a lot, guys. Trust me. I've been doing this 25 years. It's a lot to come at. And today is really this big overview of what you should be doing. But I'm going to start to get to the point in this conversation with the two of you in this room, and there's nobody else online. No. Tell me about, I got one person online? 2 people online. Fantastic. So I do want to speak to what it relates to your business, how it's impacting your business. We've actually gone over quite a bit already, just in regards to setting up QuickBooks, making sure you have the correct zip codes in there, making sure the addresses are set up correctly so the system can automatically accrue. How about some questions coming back my way from this tax liability before I move on any further? Speak to me about, and those people online as well, please chime in. Speak to me about your struggles as it comes to taxes and sales tax in particular, and what you're trying to get out of this, because I've thrown a whole lot at you in the last hour.
We just got incorporated this year, so
Okay.
we haven't filed any taxes yet.
Time to start.
So I was like, okay, we just got QuickBooks up and running.
Fantastic.
And we haven't, we're officially starting April 1st to get like, okay, this is when the company is beginning.
Okay.
And so I guess some of it is right now our big job is to spend money at the moment.
Okay.
On resources and people, like, because we're prototyping and R&D. So I guess just QuickBooks we have someone who's sort of helping us set it up, which is really good. But I guess we want to make sure that we're getting the right, just as we spend versus we have no income at the moment.
Sure.
Or does like investment money, how does it count as like?
So that's a capital investment. So you want to have a line item within your chart of accounts to track that capital investment coming into QuickBooks.
Not as income.
Not as income,
Okay.
No, because remember, and why do we not want it as income? Because what happens to
pay
income?
taxes on it.
There you
Okay,
go.
cool. Yeah.
Exactly. So it's good that you're thinking about this now. Core aspect is getting QuickBooks set up, but then you're going to need a bookkeeper to maintain it in some form or manner, unless you feel comfortable doing that yourself.
Do we have someone?
Fantastic. So and
Okay.
we can set up a meeting to go in a little bit more detail, but as long as you've got QuickBooks set up, you're registered, I know you've got yourself set up with the state. It's more about creating that structure within QuickBooks.
Okay.
Are you going to be a service or product based? It sounds like service based.
We product eventually.
Eventually, but
Yeah.
for right now, it's all service based that you're dealing with, or
I think
just
so. I think it's only product.
what is the
Eventually.
final product going to be?
Oh, it's a medical device.
Okay. So right now it's all product development is
It's
what
all
you're talking
product
about.
development, is what I mean. So like,
Okay, yeah.
we won't have income for
That's fine.
like years. So mostly we having it for tracking and
Big tracking
payroll and
expenses.
stuff like that. But I'm mostly taking this because I'm so lost on my personal taxes this year that I should understand this. So I have some idea. So when my bookkeeper and tax person goes, here's what's going on, I can go, I understand this. So,
Well, you're in the right place and you're off to the right start there in that
Okay.
regard.
so,
Let me try you.
Like her, I've only started our doors open like 7 weeks ago.
Oh, wow.
So I'm really happy.
Congratulations. Okay.
Percent,
You don't have to worry about this year, in other words, you're saying right now.
Not yet. I mean, well, last year we did the build out. It's a wine bar.
Oh, okay.
So we did the build out last year. All the investment went in last year.
Got
Doors opened in Valentine's Day,
it. Okay.
roughly. And so just nugging through it right now. Prior experience was QuickBooks
Okay.
on what we talked about. It
Desktop.
was a standalone version.
Yep.
But it's for commercial real estate. So it was basically just moving rents in and out and paying for the building. So now the next portion, and also switching over to the online version.
Sure.
Do have an accountant.
Smart, right?
Still want to know more about it than I do
Absolutely.
right now.
Seek to understand. It should always be the philosophy when you own a business in that regard. So, no. How about any of the individuals online that want to share with us a little bit about their story and what they're looking to get out of there?
We have Madison from Highlight
Okay.
and Alec from Song Points, actually Miraland. I'm sorry, I think the name changed. They're both engineers.
Oh, okay, great. Well, guys, if you want to share, please do before I move on. Here, again, just knowing that, and if anyone here does not feel as comfortable as they want coming out of this conversation, know that, we can set up an appointment for you to sit down with me and go over this a little bit more detail.
Oh, Alec asked us a question.
Perfect.
Does a company need to pay taxes on money from investors?
No, not initially. Is that Madison asking?
It's Alec.
No. No, but we should talk about how that is tracked, because this has actually come up before. And one of the things I most certainly would do is have it tracked within a line item within your chart of accounts from an investment standpoint. So these would be capital investments coming in that you are going to want to track. And this can relate to outside investors or even internal investors, meaning the owners of the company, things like that. And I have had this question arise in the past, but that would be your best methodology right now. But the answer to the question is no. Okay, jump back onto my other slide deck here. So we've got up to.
And Madison, feel free to chime in the chat or the Q&A if you have any questions or comments as well.
Yeah, please do. Please do. And again, we're such a small class and I'm getting through this material so quickly. I see us being done by like 3, but we will have time to go over specific questions and scenarios that you may have in regards to pretty much anything that relates to taxes and QuickBooks. Our friend just stepped out the room. I'm just going to wait for him to get back and then we can continue. So now that we've talked about sales tax within QuickBooks, let's take a little bit of a deeper dive into what QuickBooks is going to tell us when it comes to the sales tax liability side. Now, the good news is much like this sales tax liability report that you see in front of you, the system will auto generate a sales tax report based on any sales that you've done to your vendors. So within the reporting system itself, if you actually go down to vendors and payable, you will actually see a sales tax liability report that the system generates. If I can get my mouse to, which is pretty much, and I'm going to push this guy way back. And the reason I just wanted to touch on this again is to talk about the tax rates associated with these particular locations. So one of the things that you're going to want to make sure when you go into the BOE is that these tax rates that you're accruing always are reflective of what you're seeing within the BOE, right? Now, the Board of Equalization.
Thanks.
So apologies if I didn't clarify on that. The BOE is the state entity that handles all income and sales tax related liabilities. So when you actually do your reporting for the state portion, right, not the IRS, it will be the Board of Equalization that you will be reporting to. And a lot of the material that I'm going over today speaks to the BOE. To be quite honest with you, the IRS is the easier portion of the reporting, not the harder one. That's just my perspective there. The state side of it is a lot more detailed, okay? And it's part of the reason that I recommend having a good CPA. Most people can make it through the IRS reporting. It's not that hard. I will actually show you the document in a little bit, but the BOE's requirements are that much more because they want the granular detail, right? They want to know what county, what city, what area you were doing your business in. So again, taking the time to make sure you got the correct tax rates, because again, you come to the end of this and you're not accruing correctly, and you've got this $20,000 bill sitting on your screen that the BOE says you have, and you're only showing $5,000 accrued in your liability account, that's still on you. Still got to get it. It happens more than you know, madame. Yeah, you wouldn't. I'm not joking. I've seen people cry in my office because they're like, I don't have it. And I'm like, I understand, but that's what it is. So taking the time to make sure that it's set up, I probably said that to at least 10 times since we sat in this room, but I cannot emphasize this a month because it falls on you. It falls on your business once this takes place. And so,
that has to be clear.
Yes, it really does.
Damon Industries.
No. Yeah, so with that said, there are a couple of forms out here that we can utilize to walk us through.
Okay.
I'm going to show it. I'm going to finish up the local tax, and then I'm going to start.
It's pretty famous.
Okay, good.
Really?
Well, this,
As much as possible when we're talking about taxes. I mean, listen, if I don't manage to put you to sleep after 2 hours, I consider that a plus. Because it's even hard for me to talk about taxes for 2 hours, to be honest with you, right? It's like, geez Louise, they want to take more of our money. How do we make sure that they get the right amount of money and not a dime more? And that's what I'm doing, right? That is the secret there. But the key to that, you got to be your own best boss. You've got to be doing the due diligence. And I can't emphasize enough, you know, I've been working with QuickBooks now for 25 plus years. They got it down.
Yep.
And the part about this that I will speak to specifically is not only did they got it down, but they are kind of unique in that if they handle your tax reporting liability, it's their liability. If you get audited by the IRS, they will send an attorney, they will fight on your behalf for that claim. There are plenty of other businesses out there that will work with your QuickBooks and file your taxes and take your money. But when the IRS comes a knocking, peace out. There is a sense of security that goes along with knowing that it's being done right and that if something comes up, they've got it handled. And that relates to sales tax, payroll taxes as well, both sides. So there's a peace of mind that goes along with paying that extra $12 a month to make sure that they're doing your payroll and not Joe Smo. And yes, is it another liability? But what does that mean to your business, to your peace of mind, to your head when you put it down on the pillow each night and go to sleep? Keep that in mind. Local taxes, we've talked about it pretty heavily here, just an overview perspective. Local authorities may tax personal property such as machinery, equipment, furniture, supplies, leased equipment, movable machinery used in this business. I bring this up because it works the other way too. If you are leasing an equipment, you are able to then amortize that over a period of time, making sure that it's set up correctly, making sure you have an amortization schedule in place, are all things that you need to ensure are taking place within QuickBooks so that you maximize the return that you are filing either quarterly, monthly, or annually with the IRS. Okay, can't speak enough to that. The key part about the amortization schedule is that you want to be consistent. If you have 3 cars and you have a fixed amortization schedule for 1 car, the same methodology should be utilized on the other ones as well. Consistency is what they look for. They come into your business and they see that you're doing everything the same way, they're going to give you double thumbs up. But if they come in and see 1 amortization for that, 1 amortization for that, and 1 amortization for that, 3 different things doing the same thing for the business, red flag, red flag, red flag. That's how the IRS work, right? They look for things that are out of the norm from a traditional. So if you're just, strolling along, just getting everything done and everything is set up correctly, they're not even going to look at you. They are looking for those flags out there, those out of the normal situations. Keep that in mind as well.
You never run the slides right now, just so you know.
Oh, that would probably help if I was sharing what I was saying. Sales tax side, so we've touched on this in multiple different areas, but the specific definition that I want us all to be comfortable with is unless you happen to live and do business exclusively in Alaska, Delaware, Montana, New Hampshire, and Oregon, the 5 states that do not impose general sales tax, you have been exposed to state or local sales taxes, which we have residing here in California. To better understand the specific sales tax, please call your state authorities. So you don't have to call your state authorities. You can go to the DOE, or you can use the database, the QuickBooks database for sales tax that I will show you after these slides. That is it for my slide deck relating specifically to sales tax. And I am now going to show you, stop sharing. Any input from any of the individuals online? Lastly, but not least, I'm going to walk you through the checklist that actually QuickBooks has established.
Oh, Madison had a question.
Oh.
It said, how are donations taxed?
So, so donations, we need to decide how you want to treat them. So specifically donations are treated under the auspices of the entity that the donation is made to. And it is perceived, if it's a taxable event, as income. Now, the only caveat to that is an entity such as myself. So the CIE is a nonprofit. And as such, because it's a nonprofit, if you donate anything to us, because we're a 501c3, you can claim that as a tax deduction. Where specific donations to a company are not treated in the same way. So I would need to understand what is being donated, what it is being donated and utilized for, and in what manner. Is it a cash donation? is someone donating computers, et cetera, et cetera. Because if it's a physical item that's being donated, it does have tax implications because those are considered what's known as in-kind gifts. So as an example, if someone were to donate this laptop to me, the donation and it was worth $1,000, right? The 9% that we pay here in SLO County, I still got to pay it, even though it was a gift to a nonprofit. So when it comes to donations to your businesses, be very specific about what you're utilizing it for, because donations are a two-way street, not a one-way street, right? Just because someone donated this, that actually means that they have the ability to claim that on their taxes. Conversely speaking, if I don't claim it, then I get the liability that's associated with it because it becomes a gift. And that's the difference between a gift and a donation, between the two. One carries a different liability associated to the other. Now, we can get really complicated and we can do something called an in-kind gift, which is where you give something in kind, but then I treat it differently internally and I amortize that product and I claim it as an expense internally. So this is where it can get a little bit more complicated. I need to have an understanding of the structure of a company and why are they donating that to them. So who asked that question? Madison, you and I can follow up in regards to this. If you can give me a bit more specifics, but hopefully that answers your general question from that perspective. See if I can share my.
Thank you.
You're welcome. I do see if I can. I want to go through this quick checklist with you guys.
If investments aren't taxed,
So let's.
is there a way? Yeah.
So when we say investments.
Yeah.
Okay, what are we talking? Are we talking an equity firm investing in you?
Yeah.
Are we talking a Joe Schmo walking in and writing your check and go, I want a percentage of your company?
Yes.
Yes.
Both.
Okay. So the real question at hand is not, do we tax what is being invested? It's how what is being invested is categorized.
Okay.
Because it's not being taxed on the initial income, but what it will be taxed on is what you spend it on in regards to the business entity as a whole and how that is tracked, right? So if I take $1,000 and I put it into your company and then you say to me, take 300 towards R&D, 300 towards personnel, and then 300 towards building my office out, right?
Mhm.
Each one of those are an investment in the business per se, but they're an expense to the business as well. So it's not categorized as an investment, it's categorized as it's categorized as a capital investment in the business, right? Here's where it gets a little bit tricky.
Why can't, I guess, donations be a capital investment?
It depends. So it's two-sided. It's not your side that's the issue, it's the other side, right? So let's say I come to you and I say, donate this mouse to you. Yeah. I go to my tax return and I go, I gave her a mouse minus $100 off my taxes, and I gave it to this entity. Great. When they come to do your taxes, they know that that's yes. And so this is where the issue comes into place. If that person is saying, this is just for you, I'm not going to file my return, that has to work on both sides from a donation side. That's why you get that little slip when you go down to the Salvation Army and it has that number on it.
Yeah.
That's what that premise is for. Now, am I sitting here and trying to tell you that they tie every single? No, they do not.
But if they were to, you were to get audited,
that's what they're looking for.
Okay.
Correct. So donations are great for your business. I mean, but it's not you that's the issue. It's the other side. What are they doing? Are they just giving you junk so that they can claim it as a write-off against a nonprofit or so? Because we've had that happen.
Yeah,
just so you know,
of course.
like here's a chair. It's worth $500. No, it's not. It's not even worth $5. But I want to write $500. So you do need to be very clear about how and the methodology that you utilize in that regard.
Okay.
Does that make sense?
Yeah. I don't know if we're going to get any gifts, but I was just
No, it's a good question to ask, Dad. Okay, so let's go through the guide that is actually provided by QuickBooks to set up final taxes. And the reason I want to walk you through after everything that I've shown you today is from a knowledge-based perspective. As I walk you through this now, you should have a little bit more knowledge based on everything else that I've shown you to this point. So let's see if I can share my screen. Man, we are flying through this stuff today. Go full screen. Maybe not. Okay, again, everything I show you here today, I'm going to send out after this email, after this class, so that you guys can go through in a bit more time and effort and see if you have questions. Invariably, I tend to get a lot of questions after the fact, just because you're going to go back through some of this material and go, should ask that. I will hand out my card at the end. Don't hesitate to reach out to me. So one of the things I like about the checklists that are provided by QuickBooks is they are very step-by-step basis, meaning they literally walk you through what needs to be taking place for you to complete the task at hand. Now, that may sound a little bit rudimentary, but understand that a lot of the time, people that are looking at this have no knowledge base. They're much like you guys. They've set it up for the first time. Somebody else does their QuickBooks keeping, and now here they're sitting in front of their QuickBooks and they want to walk you through that process. QuickBooks does a great job of holding your hand and walking you through that process. If you have done everything that we've talked about today up until this point, then this is going to go seamlessly for you. With that said, the good part about this is it will ask you the questions that are not always asked. So things like deductions, right? Year-end reports, tax bundling, these kind of things that you think about every day, but you don't quite know how it relates to payroll taxes, income taxes, so on and so forth. So this guide is a great way for you to review that. Take your time to ensure that you're doing all the necessary steps. So reviewing transactions, connecting your bank account. Why is that so important? We've talked about in my intermediate class the fact that the bank has the ability to talk to your QuickBooks and reconcile the transactions that are coming in, enables you to stay on top of exactly where you are at with your business, right? Double check your tax profile before you file. Go in, make sure that all that relevant information is accurate and up to date. Again, we tend to only go into the IRS portion of it once a year. Make sure that all that information is up to date and accurate before you're hitting that submit button, not after. That's a whole lot harder to have to go back. I talked to you guys about the $400,000 that I found we were paying. It took me 4 years to get that back from the DOE. 4 years of paperwork to get that back. And do you think they paid me any interest on that $400,000 over those 4 years? Oh, hell no, they didn't. But if the tables were turned, you better believe they want theirs. Okay, so make sure that you're reviewing it and setting it up correctly. Make sure that all the information is up to date. Review your mileage. Business miles can be one of the biggest tax write-offs. Make sure you're getting the most of your self-employment deductions. I cannot emphasize this enough when it comes to taxes for you guys. The amount of times that people come to me and go, yeah, I don't have any expenses. What do you mean you don't? Did you not drive this year? Your home, if that's where your business is, that is your base. That means that anytime you step outside that house and you go somewhere for your business, that's an expense.
How do you know what things to track and save? Like mileage, receipts, like, I mean, just so you don't end up like a crazy person, but also I don't save anything. I was self-employed last year and now I'm kind of doing taxes.
So the answer to your question is everything.
But I thought you said we don't use that word.
When it comes to your business, but what do I mean by that? So here's what I do. There's some simple little tricks that you can do, okay? So, and these are things that I talk to the accelerators about. They're much like you guys. New guys starting up, you give them 10 grand at the beginning of summer, start your business. The biggest offset you're going to get to revenue income is expenses, right?
Yeah.
So track them, right? And what do I mean by that? If you travel, and this is my rule of thumb, if you travel more than 5 miles, you should be tracking it. Okay? You walk out that door and you go to a meeting and it's more than 5 miles away, you should be tracking it. You should be tracking it from a mileage perspective. You should be tracking it from a wear and tear on your car perspective. And it's a simple method. Here's how I do it, right? Anytime I set up a meeting and I have the address of where I'm going, I just do a Google map and hit the mileage button. Done. And at the end of the month, I go through all my meetings and I have 7 months. Done. Off it goes. That way, I'm tracking it on a monthly basis. At the end of the month, I'm reconciling all my travel expenses and then hit the system in one go. I get my reimbursable, using a card, whatever it may be. That is a bit of methodology to utilize to track it. I will tell you, it is by far the area that businesses miss out
Yeah.
from a write-off. Things like lunches. How many times these guys go to lunch to meet a lawyer? I'm like, I didn't see this expense in your. Well, we just had a lunch to talk about incorporating. It's a business lunch. Where's the expense? Why is it on the system? Well, we just, so you went to an $80 lunch, which you're probably going to do 4 or 5 more times. Okay, that's
Yeah.
$400. You don't want that write-off? Okay, there's a mentality that goes along with ensuring taxes is not just about paying the government. It's about ensuring that we pay the government the least amount of money.
Yeah.
Because we work damn hard for our money.
So how do you, I guess the other thing is like, let's say I mark, okay, I drove, like this last weekend, I drove 521 miles. I
Good,
took a picture.
sure.
Right? Okay.
So I Google
Okay.
Maps it, and then that's it there. That's what we
Perfect.
submit with it, so.
So I guess that's what I was going to ask, just like for, let's say these lunches or you're like Google, like in Google Maps, whatever, I'm gonna have a mileage number, but as far as tracking, let's say I get audited, what do they need to see to know that that lunch wasn't just like me on a date?
Nothing.
Like I don't have to write like, here's who was at it, or here's.
Where's the burden of proof? It's on them, it's not on you. You don't have to prove what you did. They have to prove you didn't.
Oh, really?
Yes. It's not the other way around. You're not the criminal here. You didn't do something wrong and have to prove your innocence. No, they need to prove. And this is why I talked
So as long
about the
as it's serious.
consistency.
Okay.
Well, this is where the consistency of what you do and the methodology comes into play. If they see that every month you do 6 trips, you have 3 lunches, and it's pretty. But if they all of a sudden start, wait, she did 800 miles that week, and 800 miles, and 800 miles next week. Ooh. So the burden of proof is not on you. As a matter of course, right, internally, what I recommend is you have your travel reimbursable, so you have some kind of a form that you make your employees submit, including you, with the Google form. I literally, when these guys submit travel reimbursements to me, they go into Google, they go from to print, and they give me the form, and it says 88 miles. I submit that.
Okay.
Okay, now that's internally, I'm not saying, but here's why it's good.
Yeah.
If you go into QuickBooks, you would be a customer or a vendor,
Yeah.
let's say, within there. To submit that reimbursable request, you would enter your review and you pay yourself, right?
Yeah.
Within that, you could attach those documents
Mhm.
to it. So if you were ever ordered and an order brought up that reimbursable and said, okay, show me the supporting documents, you just click on the little bit paper clip at the top, and it's going to have a picture of the Google Doc
Yeah.
with the mileage, plus the form that you used to submit it, and you go, there you go. That's what I used internally to track and hold my employees accountable for the mileage that they're submitting. So they couldn't just say to me, yeah, I did 587 miles. Okay, show me where you went. I want to physically see a Google map of where you went. 587, that would have taken you 9 hours. Where? Oh, well, this is where you answer your questions
Okay.
from that perspective.
Thanks.
Make sense?
Yes.
Madison raised a question as
I just
well.
did an Excel spreadsheet, real simple, each month by tab, accumulation sheet up front.
That's
Okay.
it.
And then you just plug the
them.
maps.
Yep.
Whatever,
And that was it.
whatever it
Like,
says
what
the
do I-
mileage is, that's what it is.
It is what it is.
Okay.
Just type it in. They've never asked, but if they do ask, there you go.
Okay, perfect. I was like, what's the necessary amount of documentation?
Yeah.
And if that's
That's every audit I've been through, that's what I provided from that
Okay.
perspective. Yeah. Madison's question?
Yes, Madison asked, how do you track wear and tear on your car as an expense?
I thought that was counted in the mileage.
Yeah, so that is the mileage. That is the premise behind the 38 cents a mile that counts for not only gas, but wear and tear on the car as well. And those rates change yearly, and you can look them up. They are dictated by both the Fed and the state from a rate perspective, and that accounts for wear and tear. I cannot overstate tracking and capturing your expenses as much as possible. I literally do a whole class with the teams about collecting your expenses and tracking them, because these days everything to them is just come in and go out, but the idea of actually tracking these expenses doesn't become part of their thought process until way later on, when they realize, ooh, that's an offset to income. Ooh, that's an offset to revenue. Yeah. So we talked about reviewing mileage. To claim mileage, the IRS requires that certain info about your vehicle info needs to be up to date. This speaks to what we were talking about earlier, right? Now, understand that unless you're renting or leasing a car for your employees, which we then can claim as a write-off too when we're filing our taxes. In most cases, your employees have reimbursables that you're then reimbursing them for at the end of the month, at the end of the quarter, so on and so forth.
And that gets reimbursed separately, not through their,
So it can run through payroll, but I traditionally do not recommend that you do it.
okay.
I recommend that you keep it separate from payroll altogether. And when you do your vendor runs every other Friday, or when you just run your employees' reimbursables at that same time.
Okay,
Really simple matter, a lot easier to do.
okay.
Checklist, back onto our checklist again. This is something that I do like to emphasize. Double check your reported business assets, right? Assets aren't like standard expenses. They usually last a long time and then tend to be a larger purchase amount, $200 plus. Now, in my world, I tend to bump that up from $200 to closer to like $1,000, but it honestly depends on what granular level you want to track your expenses at. And are used exclusively for your business. Example of business assets are manufacturing equipment, cash registers, and computers and tools. To ensure your business assets are categorized as a business asset in QuickBooks. So this is where we were talking about a little earlier about making sure things like assets are documented, right? They have an amortization schedule behind them so that you're getting the maximum tax benefit or write-off from these. Now, taking the time to make sure that the amortization schedule is set up and that the equipment is set up correctly is on you, but the benefits for your business, as you probably can tell, is huge. Those are significant deductions at the end of the day. So make sure you've got it set up correctly. Make sure that you are reviewing it annually when your leases come up. This is another common mistake for businesses. It tends to be an issue with the larger businesses, but it is something from a routine perspective that you certainly want to make sure you're getting comfortable with. Important missing transactions. Okay, so this is where we get a little bit into the tricky area because it relates more so to the payroll and self-employed side. But even if you accounted for every expense and source of income throughout the calendar year, it never hurts to check. Add any 29 transactions that you may have not reported, or in this case, 2021 transactions in QuickBooks Self-Employed, especially if you started using the product after the start date of the new year. So in your two cases, we're actually talking about that. But the question I have for you is, have you ensured that you have captured all of those expenses dating back to the beginning of this year? And how does that relate to any transactions that took place last year? So I know in your case, you said that last year was the build out, you opened your doors this year. So technically speaking, you actually have no sales until this year. So yours is pretty straightforward. How about your side of the world? I know you got everything set, but were you operating last year? Did you do any sales?
No sales.
No sales.
Just spending.
Just spending.
Yeah.
So zero return is what we're going to be filing. Great, right?
But we weren't like incorporated or anything.
So just a sole prop then back
I
then?
think it was a LLC. And
Okay.
then we switched over to
The C corp.
on the, C corp at the beginning of the year.
You're pretty experienced. You got zero. Got nothing to worry about then. It's so funny. I know Sarah came to me earlier and we were discussing their side of the world. I'm like, you guys didn't do anything else. So you're not have to, really? I don't have to. No, it's great. Okay, so we've gone through the checklist. We've talked about payroll. We've talked about sales tax. We've talked about ensuring that we're reviewing all the transactions before we're submitting. We've talked about assets. Questions for me before I jump into the last section? Anything in regards to that we just touched on that you have specific questions for me? How do we try? Oh, that's the old question. No? Really, guys? We'll make it that easy.
If we're using asset, obviously if we like buy a computer, let's say, we get investment money, we buy a computer, clearly we have an asset that we bought.
Correct.
Or we buy a piece of equipment.
Yep.
That will now amortize over time.
Mhm.
Well, what about like, fancy computer here that I've been using that's already mine? Does this count as an asset that?
So yeah, so let's take a step back. So your first question was actually, is there a threshold for an asset? Was
Yes.
really what you're asking me. And the answer to the question is yes, but it's dictated by you. So as an example, for me internally, the $1,000 is my threshold. Anything here is more, that's more than $1,000, it becomes an asset. If it's less, unless it's a specific reason, it's not worth it to me to do it. So let me give you an example. This computer was $1,200. It's an asset to the CIE. It's amortized over 4 years. We also bought a camera for the SBDC to take pictures of when we do events. That camera was $600. It is not an asset. I did not amortize it.
Okay.
Because in my opinion, for me to amortize it over 4 years at $150 a year, it's just not worth it from an expense standpoint, right? To depreciate the value of it over that lifetime, because that's what we're doing, is we're depreciating this asset each year at a certain dollar amount and claiming that as an expense on our return. The idea that after 4 years, this will be worth zero and we would go out and get a new one. That is how the technology cycle in here works, is every laptop is built on a 4-year amortization schedule. Once the amortization schedule is complete, then I donate this back to Cal Poly and I have the employee go out and get a new one.
Okay. So if you're not planning on going and like having that cycle start of like, okay, it's.
That's why I say it's a little harder when you get it right in the middle and you end up making more work for yourself. So yes, we could do it, but here's what you would have to do. You would have to go out and see what the actual real world value of that is right now. Compare it against the price that you paid for it, and then you would be able to claim a percentage of that value in that regard. And that's how the amortization works.
Okay.
Now, my recommendation is moving forward that you do that with any assets over, and you can lower that threshold. If you feel more comfortable at 500, you can certainly do that. And track each of those items based on what you define as that threshold.
But then are we required to get a new one at that point?
You're not required to do anything. This is a business strategy to expense it. So the $1,000 that I spend on this, or the $1,200 over that period of time, I will have returned that to the business as an expense, right? So at the end of it, this is not going to cost me anything. The business is picking up that total expense, which I am then claiming back annually as I amortize the value of it down. There can be significant savings for you if you know that you have 20 laptops, 3 cars leased, 5 printers. When you start getting those size assets, or the other area that I've seen it is, I do this with the SBDC. So much of what I deal with here is different entities. The SBDC is one of them. They have their own budget. But the way I structure them is, it's not just the laptop. I have the laptop, the monitor, and the printer. And I say that bundled together is $1,500.
Okay.
So there's 4 of them at $1,500, and I amortize that over 4 years. So I don't just say it's the laptop, I say it's the whole package together, which bumps that value, which is why I'm trying to emphasize that, because you can go about it in that method as well. The choice is yours.
So it could be like a camera and 3 lenses.
Exactly. That's where I'm going, because like my media department, they have that camera we talked about. I didn't want to do that, but they also have a $2,000 printer in there that prints all our lovely prints. That one is amortized, right?
Yeah.
And I am depreciating that, and after 2 more years, that will be completely written off. So that's the strategy you want to have as you start to think about it.
I guess I'm not clear about like why you wouldn't write off. Like, let's say the camera that's 600.
It's just work.
Oh, so it's because it's
the labor associated with the, you have to go in each month when you close it and make sure that, because your amortization isn't a 1 year, can make it a 1 year, but accountants do not like to see that.
Okay.
So you're basically taking, let's say, 150 a year and amortizing it over 12 months, which is $12 a month that you're having to go in and make that entry for to do that. So that's why we establish those different thresholds to dictate whether it's worth our time and effort.
Yeah.
Your time is valuable as well. It's something that we don't always think about, but it is.
Yeah. Okay, thanks. That's helpful.
And we do have another question in the chat. Alec asked, if an investment to a company is used to pay the founders, CEO and CTO, and that company has lost more than it has made, how are those salaries taxed?
So their salaries are taxed at a payroll tax level automatically. It doesn't matter whether they're founders or not. With that said, if you have a company that is losing money, when it comes to file their returns at the end of the year, they're not going to have them filed as associate. So they will be able to claim the losses and roll those losses forward. Again, just a great example of why you want to make sure you have a good CPA. Okay, because there's a strategy there's a strategy with rolling losses forward to create growth within the company, right? And just so because companies tend to struggle at the beginning, you can roll your losses and claim them to a point that it actually becomes growth for the company. So we use that a lot with small companies like the accelerators, where the first 2 years, we know that they're not going to have any sales, right? So everything is an expense that we are then able to roll that forward for them, so that eventually when they do get to a point where they're getting an income and revenue, they've accumulated all these expenses that they can then use as a deduction. But that only works if you start doing it from day one.
Okay.
You have to have it in your head that I'm claiming those expenses. I'm just holding on to them. I'm holding on to it and then rolling that
I didn't know
liability.
you could roll that in.
So, well, and this is where the strategy comes in, CPA, and this is why I talk about planning. It's not technically rolling because businesses can, this is where it
So
gets.
if the IRS doesn't know if you did, it took 2 years or 3 months to do it.
There you go.
Okay.
Okay, and so I'm not going to advise you in this area because I'm not a CPA, but this is where the lines get blurred. And if you understand what you're doing, you have more control over your cash flow. And just understand,
Yeah.
all of this relates to cash flow, right?
Yeah.
The biggest single obstacle that businesses have today to keep the doors open and the lights on is cash flow. And that's what we're talking about. Whether it's paying your taxes, paying your employees, reimbursable, it's all cash flow,
Okay.
right? Because that's the lifeblood of what your businesses are is going to be moving forward. Okay, one last section. I wanted to show you guys the database. Really quick. Wow, 234 is the fastest I've ever done it.
Look at us newbies.
I know. Well, it's nice when it's a smaller group and I can interact with you. I've had it where it's a room like just,
Oh, gosh.
and it's really hard because I can't really have these conversations with individuals who get it. It's because I'm dealing in such general terms. Yeah, let's share this part of the screen. Okay, so QuickBooks at Intuit.com. This is the actual database. I will include this link in the email when I send it out after this class, along with everything else that you've seen today. I just went in here and typed up setting up sales tax in QuickBooks. You're literally going to get a walkthrough step-by-step process on how to do it. They'll probably even do a better job than what I did of explaining it because of the simple fact that they've had to do it so many times. What I'm trying to make here is just having access to this community side of things and getting the most out of QuickBooks. There's not a question that someone can ask that has not already been answered in here. And I cannot state enough that this is my go-to when someone comes to me with a question that I don't have the answer to. I always start here. And it's a great way to increase your knowledge, to increase your understanding. And listen, we're not all experts in QuickBooks, but this will go a long way to answering the questions and getting there. If this can't answer it, then come to someone like me or be going to a CPA, because really this is the questions that you're going to want answered has normally been asked prior to this at some point or another. I can't overstate again what a great resource it is to have.
You're only frozen.
Oh, it's on the other side.
Yeah.
Why am I not seeing what's on my screen? With that said, that's what I got for today, guys. Like I said, we whizzed through it a lot faster than I thought. We do have plenty of time. So if you have questions, comments, concerns, want to tell me about your business and ask me specific questions, now's the time to do it. If you want to go ahead and set up a follow-up appointment with me, let's go ahead and get that on the books. And if you are not signed up to be SBDC members, I would highly recommend that we go ahead and get you set up. So,
Question, I don't know if I am, I get the emails, but
Madison, can you
I
look
can
up
look
real
it up
quick? You can look it up
right
right
now.
now.
And then I will have a couple, speaking of SBC, I will have a couple slides to share once we are done, but I'll give a little more time if
Cool.
anybody has some more questions. But let me see. Here it is. What is your company name?
should be, well, a couple of them, it was either Smooth Carrot
That's a good name.
That is a really smooth carrot.
Yes,
What a great name.
don't give it to me. It came as the default password for a Netgear router.
Are you
I
serious?
bought like 10 years
Oh,
ago.
that's so funny.
I love those funny combos
Yeah,
of like funny words.
Yeah.
Like, what was that? I
I
had a
love that one to death.
strange table as my
That was
password
great.
for one.
Oh, yeah,
Yeah.
that's good too.
I was like, oh yeah, strange table 625.
Those windows, hopefully that'll speed things up a little bit. I think we are.
So C Corp can have their losses carried forward, you see.
Okay, that's great to know.
So the rule of thumb is operating losses can be carried back 2 years or forward 20
And that
years.
covers, this also start another.
You got to be.
Does that cover all of
If
it?
they're
This is
separate
why I say you
entities,
need to-
no, we do need like a separate,
Because-
they each need a
Wait,
unique
how many years
email
in?
address.
2 years back and 20 years forward.
Then.
Yeah, so if you just send another client application,
How do you
For
Okay,
that one?
For the new one. All right.
as long
Well,
as. it has some
you can
email
carry
address,
forward.
then
you can carry forward 20
We'll have to
years?
just do a quick phone call and then we'll take.
Okay, easy.
And they both have
That's
to
good
be
to know
on the
because
same-
like med device, I'm like, we're gonna
You're gonna
just
just-
spend money
Yeah,
for like
yeah, we're-
7 years.
And then, yeah,
And then. we're gonna make
absolutely,
money.
yeah.
So-
You get to claim all that.
I just wonder, like, to simplify it, can I create them all under my
So
name?
luckily, Donald, my
So I
co-founder,
don't,
his
I'm not
wife.
trying to read two different sets of emails. and
She's like,
so
I taught
get rid of-
QuickBooks classes. I was like, yeah,
This
but
is
I
one
don't
of
know
those
about it, and
You can, they can have
and teach me, because I don't need to know how to do it. I just
So
need to
that's
understand
standard.
it.
Yeah.
You know, and that helps me
Trying to
be a
simplify
better
my life.
person.
Oh, absolutely.
Like, what information do you need and why? That helps me give you the right information off, like,
You don't know the right questions to ask when you don't have that knowledge base, right?
Exactly.
And it's just like a stepping stone. You get enough knowledge to ask the question, which increases your knowledge base, so you ask the next
Sure.
question, right? So like a carry forward right now that you just asked me about, and I clarified, I went and looked it up, I'm like, okay, I didn't know about the 2 years back, but I certainly knew about the carry forward, but yeah,
great.
that's huge.
So 2 years back, that's like if suddenly I was like, wait, I could
I forgot or.
adjust my
Yes.
taxes.
Yeah.
Wow, that's cool. Okay.
Yeah, it's called C Corp Net Operating Loss Carry Forwards.
That's amazing.
It is.
Okay.
So talk to me about your side of the world. What did I touch on today that worked for you? Follow
Well, I'll
up?
tell you, once we jump back into the QuickBooks, I'll see if it makes sense. I took some notes.
Great.
Looking forward to the resource portion of the show, but.
And then like invariably what ends up happening is you go away, you have a couple more questions or, if we want to set up a Zoom meeting or you want to come back and we can sit down and take a look closer look now that you have a little bit more of a knowledge base. I tend to find that tends to work really more effectively from that perspective. And same to the individuals online, just to emphasize that, we can always do a follow-up call or a follow-up meeting after on in regards to everything that we've gone over today, because I get it is a lot. That's why I set up so much time, hoping that we don't always need it, but it's there in case we do. So
Alex said that his company is hoping to incorporate in the next week or so, and he's very thankful that he attended, and he said he appreciates you taking the time.
definitely,
So,
tell them thank you very much. If there's anything else we can do to help them out in that regard, not hesitate to reach out. Is he a member of the SBDC already?
yes, Alex is an incubator.
Oh, that's right. You did mention that at the beginning. Fantastic.
And-
Fantastic.
And then Madison, I'm sure you'll see around. She needs to see you. She's in the office, but Alec, always, of course, feel free to email us or email Damon.
Yeah.
If you did want to set up a
She knows
time.
where my office is and my door is always open in the meantime. So,
Great.
and that's all I got for everybody today. Thank you very much indeed for your time and help. Hopefully it was informative.
I have a couple quick slides just to
Fantastic.
share with everyone some
Stuff, Sharon.
exciting upcoming events here. Slides here. All right, thank you, Damon. And just a reminder to everyone in person and online, the recording of today's webinar will be sent to all participants. So if you wanted to revisit anything, you will have access to that. Couple exciting upcoming events for the SBDC. We have, of course, our monthly coffee and conversation coming up on April 13th. That is 8:30 to 9:30 a.m. Very fun, laid back atmosphere. You can just interact with the speaker, Grab your cup of coffee and start the morning off right. We are going to have a very exciting subject matter for this upcoming month. It's going to be selling to the term sheet my 500 million secret for raising startup investor funds. So if you have a startup that is high growth or you are interested in raising those funds, go ahead and join us. We should have some very interesting conversation there. And then, of course, our biggest event of the year, AngelCon. Woo, we're so excited. That will be on April 21st, and we will have that virtually for free, but also there is a live event at Slow Brew Rock. The in-person pass is $75, but it does include a drink ticket as well as dinner and a great opportunity to network with the startups. AngelCon is, if you aren't already aware, a really fun event where basically 6 startups compete for an equity investment from our angel investors of over $100,000. In fact, Amy is one of our finalists, so come to meet Amy. It'll be a great time. And you can go to our events page to sign up for both of those. And we hope to see you there. So thank you so much, everybody, for coming today. And I will be sending out a follow-up email, like I said, the recording and Damon's resources. So thanks again, everyone. Have a great day.